Hi, you are welcome to Company and Partnership Law class. We have gotten to session 6, that's the last session of unit 4, dealing with account referable to shares, session objectives. By the end of this session, you should be able to explain what share this account is about, state and describe the three component parts of stated capital, and state the difference between reserve and retained earnings. Dealing with share this account, section 65 of Act 992 provide the following. The law states that when a company first redeem or purchase any of its shares, it shall open a share this account. A share this account should be open when a company first redeem or purchase its own shares. And this share this account shall be credited to that account a sum of money not less than the amount to be expended on the redemption or purchase by transferring that sum from the retained earnings. So this simply means that the amount that will be credited into the share this account, it should be not less than what you use to purchase or redeem the redemption of shares. So you transfer from the retained earnings an amount either equal to the redemption or the purchase of the company shares or more. It shouldn't be less than. Now, there shall be debited to the share deal account sum of money which the company shall from time to time expend on the redemption or purchase of any of the shares of the company. So that's what is happening. Let's say we have the share this account, AC for short. So we have the credit side and we have the debit side. Now that's what you are saying. You credit the share this account with the amount that is needed to purchase or repurchase, to redeem or purchase the company's share. So you put amount that should not be less than what you need to use to purchase. So let's assume that you want to purchase or redeem shares. So you go to the retained earnings. Maybe you have the amount that will cost for redeeming is maybe 100 cedis. The law expects you that you take from the retained earnings amount not less than 100 cedis. So let's take 1,002 from the retained earnings. So retained earnings. Now anytime we purchase or redeem the shares, then assuming that we want to redeem, then we debit the share this account with the amount that we are paying. Now this rule does not affect redeemable preference shares which is purchased from the fresh issue of shares. Note, the net price or the value of consideration received by the company on reissue of shares of any trading shares of the company shall be credited to the share this account. So the share this account, as we open, if there is a share this account, then the net value or net price of consideration received from reissue of shares will also be credited to this side. It will be added to amounts here. So let's assume that at first we had 120, then the net value for reissue of shares we had 100. So it will be credited to this side. Here, as I said, credit, here debit. Then I share this account SD. So this is what we are saying. Now if at any time the total amount of the money to be debited to the share this account exceed the amount to be credited to that account, an amount of money equal to the excess shall be transferred to the credit of the share account from retained earnings. So this is what we are saying. Assuming that this is the share this account and the amount here is 1,000. By the debit side exceed the credit side. Let's say we have 1,005. Now the credit side is less than the debit side by amount of 500. So the law says that we have to go to the retained earnings account. We have to go to the retained earnings account and debit retained earnings and credit the share this account with 500, so that here will be 1,005, here will be 1,005. And a purchase or redemption or otherwise than a redemption of redeemable preference share out of the proceeds of fresh issue of shares shall not be made by the company unless its retained earnings is sufficient to enable the transfer to be made. So if you want to redeem redeemable preference shares, then you should have sufficient fund in your retained earnings before the transfer could be done. Now the stated capital. The stated capital of a company with shares consists of the following: the total proceeds of every issue of shares for cash. So all the shares that you have issued for cash, including amount paid on cost made on shares issued with unpaid liabilities, less than, so you have to deduct something, less than or less deduction for transactional costs that are directly or incidental to share issue. Remember, when you are issuing shares, you will incur certain costs. Maybe you have to hire the service of a broker to help you in dealing with your shares. You get your total cash, you less your deductible expenses, for instance, transactional costs, that amount, plus the total value as stated in the agreement received for every issue of share other than cash. So here you are talking about amount that you receive in kind. Remember, we discussed that in kind simple may be either exchange of service or transfer of property. So you need that of cash kind. Then the total amount of money which the company by special resolution resolved to transfer to the stated capital from the reserve. You also saw this one area. So you transfer money from the reserve, that is the reserve. Remember, when we were doing issue of capitalization, we mentioned this, including the credit balance of the share this account. So here you are taking two things at the same time. You take the credit balance of the share this account, then you transfer any reserve to the stated capital. So these are the three components: cash less deduction, for instance, like transactional costs, amount received in kind, transfer from reserve, and share this account, the present sum of share this account. These are the components of stated capital. Let's now look at reserves. Reserves of a company with shares is the amount of money by which the assets of the company, other than cost and other sum of money payable in respect of the company shares. So other than here means that except, so this one are excluded from the definition. So this one, if you are counting the reserve, we will not consider this one. Excluding, not also include treasury shares. So basically this is what we are saying. Section 70 of 99 at 992 is saying that, look, to get your return, to get your reserve, we need your assets, less your liabilities, less the liabilities of the company, So we have liabilities, we have the assets. What you get is the net assets. When you do that, this is what you call the net assets. This is your net assets. So assuming that you have your assets, all your assets, both current and non-current assets, you have 15,000. Then your liabilities is 2,000. It means that your net assets will be 13,000. Assuming that your stated capital is this, your stated capital. So stated capital is 10,000. Now to calculate your reserve, it is the net assets, which is the 13,000 minus the stated capital. So the reserve will now be the net assets NA minus SC, which is the stated capital. So you have your 13,000 here. You have your 13,000 here minus 10,000, which will give you 3,000. So your reserve will be 3,000. If assuming that these are the facts, the unpaid costs, others unpayable treasury shares, you don't bring it to the computation. Also, you have retained earnings. The retained earnings of a company with share is the reserve as defined in section 70 less the amount of money attributed to an unrealized appreciation in the value of the assets of the company other than appreciation in the value of assets as would under normal accounting principle be credited to the income statement unless the amount of the appreciation has, so this place is has, not BAS, has been transferred to the stated capital. So unrealized appreciation. Then a balance standing to the credit of the share this account immediately before the ascertaining of retained earnings. So when you have your reserve, so retained earnings. So your reserve minus this unrealized appreciation, let's assume that is A. Then this one amount which is let's say it is B. So reserve earnings minus the B. So the retained earnings will be reserve minus A, which is the appreciation of the value of the asset, and B, which is the balance return to the credit side of the share this account. The answer will give you the retained earnings. By way of summary, we learned that the share this account is an account to be established by a company in respect of treasury shares. On the other hand, a company stated capital is the total paid up value, cash and in kind of the company issued shares. Thank you. Have a wonderful day.